Everybody, this is Jim at SP500chart.com. It's a little bit before 5 o'clock on Monday afternoon, the 1st of July, 2013, and we're going to take a look at the chart after I read this to you. The website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I could draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy that draws lines on charts. Okay, we're looking at a 10-minute chart. Last week, we had identified what looked like could be setting up an inverted head and shoulders pattern right here. Through the actually starting late on the 20th and continuing through to till the into the 26th, we had a breakout over the proposed neckline on the 27th, but then on the 28th we got some ambiguity as the S&P both started the day by breaking that neckline and then ended the day by closing under that neckline. So I made mention of the idea that these 2 days of trading looked sort of weird because while we were in a nice little rising channel really for the vast majority of 4 days, because these lines could be extended backwards like so, at which point you would say, well, this channel really got kicked off around the midday on the 24th, so at least a little bit more than 3.5 days, well, right about 3.5 days we're in this rising channel. Then we slip sideways, give up ground, come back, go sideways, give up a little ground, almost as if this was some kind of little consolidation pattern. Now, what's interesting is if we move this lower line right here, and well, maybe we were dealing with more of a little triangle pattern there than what I thought in the form of a bull flag. But the interesting thing today is we S&P started out strong out of the gate, started to lose some steam, and then gave up a good bit of the ground today, but stopped right on this neckline. And you know, it's amazing how many times we see this. It's as if someone who could be construed as being in control, quote unquote, likes to mess with us by closing right on support lines. For example, last Friday we closed right on this newly considered support line. If we even went back to our old line and ignored this opening dip right here, well, it still looks like it closed on a support line. Today, we close on a support line. I just find that really, really interesting. Back on the 21st, when we had identified this little bear flag. We didn't know it was a bear flag at the time because, well, the market closed right on that lower support line. Now, we identified it as a potential bear flag, but it's not a bear flag until it breaks down. So I just find this really, really interesting. So for now, I am content to say let's expect a bounce on this line, and if we get it, let's expect a move up to approximately 1640. That seems to make perfectly good sense with everything that we see in the charts right now. And I'm willing to stick my neck out and say, yeah, I'm thinking we're going to get that 1640, at which point I would expect some resistance. So really, that is pretty much based on this inverted head and shoulders pattern here. And even though that target is more like 1645, I still think we're going to get, let's put it this way, I think we're going to get resistance wherever we meet this green line. There's also a reason to expect some resistance at about 1640. This is probably the most important area to keep an eye on. So if we do rally tomorrow and then rally into the 3rd, then it could be we do make that 1645 target. If not then early next week, because we have the 4th off this week. So it's going to be a very, well, I say we have the 4th off. You know, I haven't checked the trading calendar there. Or I didn't even check to see if it's a full day of trading on the 5th. I would assume it is. So it could be with taking the 4th off that we see this green line met at some point other than what we are examining on the chart right now. Okay, I just checked the trading calendar. Yeah, the 4th shouldn't exist on this chart. And as a matter of fact, the markets will close early. The New York Stock Exchange and NASDAQ will close early on the 3rd. So we'll wait and see kind of how things pan out with the chart data as we get to that point. But what I'm saying is, whenever we might reach this green line, I would expect that to serve as resistance. And if we did have a full day of trading on the 3rd and 4th, then you could see that could take place on the 4th or on the 5th. But we have a partial day on the 3rd, and the market's closed on the 4th. Okay, sorry about that. I just got thoroughly distracted, so I may repeat something that I have already said, and that is the markets are closed on the 4th, a partial day on the 3rd. So all of that kind of maybe changes some of the trajectory as we look at this chart that shows full day elements. So I'm assuming that at some point this will get corrected. So right now, I think going forward, what we need to do is say this looks like a neckline. Let's treat it like a neckline. And now that we are over it in a technically significant manner, let's see if we stay over it. And if so, then I would expect a move up to the 1640, 1645 range, where we should find some resistance. So all of that to say that I'm sorry for getting sidetracked. I just wanted to double check on the trading on the 3rd and 4th. So there you have it. Pretty simple way to start the week, and it will be a short week, 3.5 days of trading. So guys, thanks for watching. Take care.